You are looking live at a daily chart of the Nasdaq. This is my weekly review. Today is April 12th, and of course, the market is closed because it's Saturday. But on Friday, the index fell 267 points or 1.62%. You can see the volume was lighter. Does that make you feel any better? The volume was lighter? Not me. Anyway, on Thursday, the index closed at an all-time closing high of 16,442. It was up 271 points. And you could see that it was traded above. It recaptured the 10 and the 21 and was 2.5% above its 50 simple moving average. It's rising 50. But on Friday, the world's coming to an end and it traded lower and lost the 10 and the 21 and just 0.7% now above this rising 50. So, you'll notice, in this type of choppy market, this trade range, essentially since the March 8th reversal here, we had a couple of nasty reversals on March 8th and on April 4th there. And this one was worse than the March 8th, this inverted hammer candle, because this one just pulled back to the 10. But this April 4th one, it closed below. You could see that 1% below its 21. And so all the, since, this day here, it's been closing, uh, excuse me, it's been trading below its 21 almost every day except for this one session here. It had one session on April 8th where it traded above the 21 all day. The low of the day was above the 21. But anyway, you can just see it's in a trade range. Like I said, essentially it's been like a month. We had a 32% gain in the index, from 12,543, to 16,538, a 32% move. So this is when you want to step on the gas right here. This is go time and all in, 100% margin, whatever. And then once we hit that March 8th reversal, it was time to get a little more cautious. And I didn't get cautious until last week because I was probing the market, and every trade that I put on, it would go up a little. And if I didn't take a profit that day, the next day you lost your profit and it was down, reversed, and then you sell for a loss. And so I did that 3 times. I said, 3 strikes and I'm out. Time to, this is a good time in this trade range here to, let off the gas a little bit. But that's all it is a trade range. A tradable range, you can trade here, but you got to be quick. Otherwise, you get chopped up. You can't just buy and think you're going to hold for a couple of weeks on a swing trade because, like I say, you lose your profits. It's a weekly review, so I got to look at the weekly charts. And we can see, this big move here where we step on the gas and a little trade range. It's just from the peak of 16,538 to the trough. It was 3%. It's a 3% pullback thus far. So not a big deal. Last week it was down, less than 0.5%. You got to expect some caution before earnings, and you also have to expect some profit taking after a 32% run. And a 3% pullback after a 32% run, I don't know, it just seems like it needs more time or more time to digest the gains or more profit taking and more of a correction to reset the index. And a lot of these charts that are kind of broken. I'm a stock picker, so I'm going to go through some stocks that I like or I'm interested in and just take a random walk today. First of all, I'm going to start with the mega cap tech stocks because I think these things are being perceived as a safe haven during this correction. Apple, you can see it was up 4% last week. Maybe a little bit of bottom fishing here. Maybe just it's a safe way to park some money. You're not going to get killed here. But you can see it's just in a trade range here. If I go to the daily chart, it hit the low of 168 and retested it on this date. If I can get the right here on April 10th, low of 167, and then bounced a little bit. So it's a low and then a retest and then a move higher, and it's trying to trade through these moving averages here. And I'm keeping my eye on Apple. I'm definitely interested. And with the index down, these stocks, Google, Apple, Amazon, NVDA, even Tesla were up last week. So I think they're just being bought as a, kind of a safe haven. insurance. This is Google, broke out of a consolidation last week. It was up, 3.4%. So yeah, not bad there for Google. Amazon, another one. Gosh, you can look at this earnings line just heading straight north. And a lot of these, larger cap tech stocks, they have the resources to win the good share of the AI pie, right? So, if there's an arms race for artificial intelligence, they're well equipped with resources to, do well in that battle. Amazon, definitely one of them. Their CEO, Andy Jassy, said AI is going to be bigger than anything you can imagine. And NVDA, Jensen pretty much says the same thing. He's talking about a $2 trillion industry, and you could see that, these earnings are just going straight up for these companies, and that's why their stocks are appreciating. It's amazing how earnings will do that to your stock. So I want to own stocks with good earnings. Tesla was up last week too, 3.7%. This definitely looks like bottom fishing here. I'm not going to bash Tesla or anything. It's a car company essentially. I know people want to make it out to be more than that, but still richly valued for a car company. And yeah, I'm not interested in Tesla. And you can see its earnings line is pointing due south. So you want to kind of stay away from Tesla. All right. Anyway, I'm going to go to a couple of other names. Meta, stock that I like as we head into earnings. This thing's had a nice run into earnings. You can see its EPS line is heading north. And I want to get the exact date here, the 24th. So that's coming up in 12 days. Meta will be reporting earnings. So you can see it's kind of in a trade range, tried to break out, then pulled back to its 10. I'm not doing anything wrong there. I wouldn't load up ahead of earnings, but they're probably going to deliver strong earnings. Okay, another one that I like is Spotify. Had this big run up the prior week. This looks like a short stroke pattern here, right? It was up a 17.5%. The prior week gave back 3%. That's a little much in lighter volume, but you can see its EPS line heading north, and they said they were going to raise prices. That was their the catalyst. Vertiv Holdings, it actually went down last week. Unbelievable. We're in a correction, and Vertiv is going lower. This one has been on a major tear, and then 2 of the last 3 weeks, it's actually been down. It went down 1%, and then 2 weeks ago it was up 4.4%. Last week down 1.7, but still, just trading sideways. I forgot to get the date here for this. 424. Yeah, we're seeing a lot of stocks with this, sideways stalling action after big runs. Just, a little hesitation ahead of earnings. And these companies are going to have to deliver strong earnings. Netflix, speaking of earnings, a report on the 18th, which I believe is this Thursday. It's had a real strong run as well, and just kind of trading sideways at that 624. Like I said, a lot of stocks look this way, around that March 8th reversal. That was March 4th, but they just been kind of chopping and going sideways since that March 8th day. That was a very significant day, as I showed you earlier in the video. Yeah, Netflix earnings going south. They're the king of streaming. So I expect them to have a strong report. GE, this one's trading like it's I don't know. I think investors are just happy that they split everything off and they're a little leaner and meaner now. This is GE Aerospace. They spun off the healthcare division and the energy division. And this thing's been performing well. It was down 1% last week. They went ex-dividend on Friday. So you all be getting your little dividend here pretty soon. But, made a big run now, stalling. They have earnings on the 23rd. A lot of these companies are going to be reporting in the next couple of weeks, and things are really going to shake out to the good or the bad. There's going to be winners and losers. You just got to pay attention. We know one winner because Micron, got to go to the weekly chart. You can see their earnings line going straight up. They said there's a rebound in their business, and when this type of business is cyclical, and when they rebound, it usually lasts for a long time. I mean, I'm talking a couple of years, and during the cycle. So I expect big things from Micron following this base, and with this earnings rebound, I expect that to continue for a few more quarters down the road. So they have earnings out of the way. Eli Lilly, this one's just stalling. You can see it's in this flat base pattern, just kind of like the index, made these highs back in March. Was that 800? Was it March 4th? Yeah, right around that March 8th number. A lot of these are looking the same, just in this little trade range here. Not doing anything wrong, but not doing anything right either. So they're just going to have to report strong earnings on April 30th, and the stock should respond. Now, somebody was asking about, why is this earning lines go down? They had a problem with manufacturing, I believe, of Trulicity, and they're selling everything they can make with, their weight loss drugs. But I guess on Amazon, they said that there was a little bit of an issue that they're running out of ammunition of Zepbound, I believe it was. So Lilly, they're going to report, then we'll just have to wait and see with this one. But it is consolidating in a base. We go back to the daily, you could just see this sideways action for a couple months now. And that's kind of what this stock does. If you see its history, it was while the Nasdaq was ripping, this thing was just going sideways. Then we hit January and the thing took off. So that's kind of what it does. You can see back here, just sideways action. This thing went sideways for a long time, and now it's going sideways again. But eventually, it goes higher. You can see lower left to upper right. All the sideways action is just noise because this thing's going higher. Probably going to be your first $1 trillion drug stock. Anyway, yeah, I like Lilly. Broadcom, let me see. They don't report for a while, but this thing's consolidating in a base. Had this 3 weeks tight pattern. If I zoom in here, the last 3 weeks, the closing range very tight. You can see their earnings line is slightly north. I'd like to see a little better earnings. They guided revenue to 50 billion. And so I think Wall Street wanted a little more than that. It was kind of in line with expectations. But you could see once again, the reversal here. This thing was even up, huh? Right here, the March 8th went up 14.13 and then pulled back to 13.01. That's quite a move on that day. And it's just been going sideways ever since. So, you got to make note of these special days like March 8th and April 4th. I think they're signs of caution for sure. ANET, this is one that I'm talking about. I bought this on Thursday. It had this nice little bullish wedge pattern, pulled back to a moving average, showed some strength, so I bought it. And I thought, oh, good. I'm up on it a little bit. I didn't take the profit. Friday downgraded, down 8.5%. So it's adios muchachos. You can see the volume, the selling, and the downgrade worked, and it closed 3.6% below its 50. So I just had to part ways and take the small loss. So it's feedback. The market's giving me feedback, telling me to be more cautious, and yeah, it's okay. The earnings line here is going straight north as well. So I still think it's a good company, but they're going to have to deliver strong earnings as well. All these companies are. May 7th is their due date. All right, let me see. The next one I want to go over is CMG. Now, everybody likes a 50-for-1 stock split, apparently, because this thing's done nothing but go up. This is the day I believe it went over 3,000 and pulled back to the 10. But man, this thing doesn't want to go down. Friday, it was down 33 points or 1.1%. But yeah, it's still hovering right around that 3,000 level. Unbelievable. The Chipotle Mexican Grill, they had a 3 weeks tight pattern heading into last week, and last week it was up 1.8%. So not all stocks went down last week, as the Nasdaq pulled back 0.5%. Quanta Services, this is one of these data center plays. It was down last week. You can see it broke out of a base here and ran up. Had a 3 weeks tight, continued to run higher, and now just pulled back to a moving average. It looks like it pulled back to its 21 last week, and stocks are going to do that. You can see, clearly here the breakout, the move higher, pull back to the 21, doing nothing wrong there. I do like power. EME, this one has been unbelievable. It's like a Tom Petty stock. It won't back down, broke out of a base, ran higher. It had that David Ryan ants pattern and continued higher, pulled back, didn't even pull back to the 21 here. And it was just flat on Friday. So EME is still looking strong. Not buyable, but it's a very strong stock. Tidewater, this one's going sideways now after a breakout and a run higher, just pulled back to the 10. Tidewater is one of these, oil and gas field services stocks that is just, the leading stock in a solid group here. You could see let me see, there's another one in the group, AESI. This is Atlas Energy. It was flat on the week, but this one's looking good as well. You can see the big base here, the breakout, the move higher, and it's still trading above the 10 EMA. So those ones look good. Another oil and gas stock that I like is Weatherford. Pulled back to the 21 on Friday. It broke out, ran higher, and finally pulled back to its 21. Not actionable, but a strong stock. It was down 4.8% last week. All right, Weatherford, yeah, still like it. One of the stronger stocks in the oil and gas. And some of the best setups that I'm seeing are in the oil and gas and the mining stocks. Some of the miners have gone too far, but this is Marathon Oil. You could see that setup here, the base with the pullback to the 10. Looks like it's forming a handle, so I'm keeping my eye on that one. Anyway, enough with the oil and gas. I got to go to the Caterpillar. This is a data center play, believe it or not. Yeah, it's agriculture, construction, mining, and all that. But Caterpillar, you can see broke out of a base, been very strong stock. Finally broke its string of like 1, 2, 3, 4, 5, 6, about 11 or 12 weeks in a row. I'm not going to count them all. Doesn't matter. Finally pulled back 3.6%. Caterpillar has been on a roll. Meow reports April 25th. So take note if you own these things. DR Horton reports this week. Home builders are rate sensitive, so when you hear this noise about CPI or PPI or any of that garbage, it's going to respond to this. Financial media, talking heads data. For some reason, investors buy or sell on that junk. Anyway, this one was down 4.3%. Probably a little bit of caution ahead of the earnings on Thursday. The 18th is Thursday, right? And the home builders, though, we're short on homes. We underbuilt for 10 years or longer, and now they're catching up, and there's big demand. Just, they have trouble getting enough skilled labor here to build the homes that they need, but they're going to be cranking out homes here for a while. I'm interested to see what they have to say on Thursday and see if they can get this earnings line heading, due north once again. Another stock that reported recently was Lennar, and it's broke out of its base, ran higher, now pulled back. Just a little bit of caution with these, rates going higher, the bond yields going higher. And anyway, I don't use that to invest. A company that reported on Friday and just got absolutely hammered was JP Morgan, down 6.47, 6.5%. Sliced its 50. It had been a really strong stock. It ran up to the earnings print and then sold off. So that's pretty common right there. Profit taking. Jamie Dimon was not all that sanguine at all. He talks out of both sides of his mouth though, so we'll take his words with a grain of salt. Eaton. This one's been a powerhouse too. Diversified operations, but really, the data center build out, they're going to benefit from. You can see break out of a base, couple 3 weeks tight, breakout, move higher. Yeah, it was down 3.6% last week, but after a big run like that, just pulled back to the 21, found support, and was up the last 3 sessions while the Nasdaq was, giving some back. So Eaton looks very good. CCJ, this is one of the miners that's still, actionable in a base. A lot of them have just taken off and run. So, you got to think, man, is this thing just a laggard or what? Because a lot of them have taken off. I'm going to get to that in a minute. They report earnings on April 30th. So that's coming up. You can see the big run up, the base now, and I wouldn't be surprised if it started running higher after earnings. Southern Copper's, just been a monster in this group. And when you see commodities and, mining, minerals, stocks running like this is inflationary. This could be signs of trouble. When you see gold, silver, I mean, everything's gone up. Wheat, cocoa, coffee, and orange juice, everything has gone higher. So, beware. That doesn't bode well for the economy going forward. Southern Copper is definitely one. I had AA on my list as well, and it broke out here and moved higher, and now it's just kind of squatting there as it pulls back to the 10. So this thing still, I think is actionable as well with Kamiko. Okay, one stock that's just driving me crazy is SMCI. You got to look at the weekly here, I believe. I know people talk about, it's got a head and shoulders pattern. Yeah, duh, we could see that. It made this high, pulled back, made another high at 1,229, and now it's got this little Gumby shoulder going down to its 50. And it's not the end of the world. They could come out tomorrow and raise guidance. This thing could blast a new high. So I wouldn't count this thing out, but it is looking rather weak. Closed below its 50 simple moving average. You can see it had this 8-week hold rule, and when it went up 39% within 3 weeks, just made this pole and now flagging here. So, like I said, this thing's like dynamite. You're playing with dynamite here. I see a lot of people saying, "Oh, I'm short SMCI." I think that's really dangerous. It's one of the stronger stocks. It is the strongest stock in a really strong group. So beware of SMCI. I sold it, most of it, because I'm reducing positions as a Nasdaq, just taking my foot off the gas, but hold it, enough so I can sleep well at night. But yeah, there's probably better stocks though than SMCI. That one's dragging. Speaking of dragging, Novo Nordisk. I don't know what's going on with this stock. It's forming a base here for sure, consolidating there. You can see a flat base pattern after, big move up, but it's down 5 weeks in a row. And I challenge you to go back and find out when this stock sold off 5 weeks in a row. It's been a long, long time. Great balance sheet, return on equity, cash flow. Business is going crazy. Earnings are, just straight up. And the stock's been up. It's been a great stock, but now it's just pulling back into base. And I think it's providing an opportunity here as I believe it will round out this base here. They report on May 2nd. Probably going to run with Eli Lilly, though, if Lilly knocks the ball out of the park. So anyway, that's it for me, except for I lie. I have some stocks that I want to go over in honor of the great Steve Jobs. One more thing. Peter Lynch talks about know what you own, and the most valuable organ you have in investing is your stomach, not your brain. And I don't know, just Elf sold off on the Ulta Beauty comments pretty hard. And I think it's an opportunity. I might be wrong here. I'm often wrong, but never in doubt. This one sold off, and it made a low here of 160.61 on April 5th, and then retested that low on Friday, 161.70. So it holds that low there. I think it could form a base, and then they don't report earnings till the 23rd. So you've got 5 or 6 weeks for it to complete a base, much like it did here back in last fall, September to December. And then it broke out, 131 to 221. That's a nice 90 point move. So I'll take that if that wants to. Because if you believe like I do that Elf is the new Estee Lauder, and then this generation's go-to cosmetic brand, which I believe it is. They're selling on Twitch, Roblox, TikTok. They're, I believe, the first brand on TikTok, Apple Vision Pro. And the CEO is asked about it, and he just says they're trying to meet their customers, where they're, where they're at. And so they're a pretty creative company. I kind of doubt this runs over. I think they're taking market share, and all the teen surveys, point to Elf gaining market share. The CEO of Ulta Beauty even cited that Elf was one of the strong brands. So I just think the sell-off was, it's a richly valued stock. And then when it made that 221, this looks, breakout and kind of going parabolic, and now pulling back and forming a base. That's kind of normal. It is below the 50. I know the moving averages are pointing down, and the moving averages, the relative strength line is below, but I'm just saying, watch it. And if it forms a base, it could provide another opportunity. Anyway, that's it for ELF. AMD is one that's killing me too. I get a lot of questions about this one. If you just look at the weekly chart, this is a weekly review. And institutions were making big bets on AMD. I mean, some of the highest weekly volume we've seen, in early 2024. So, this thing ramped. It was more than a double. Okay. That's a big move for a big company. And now it's pulled back. ahead of earnings on lighter volume. Does it make you feel better if you lose money on lighter volume? It doesn't make me feel any better. It doesn't matter. Only price pays. But this one is showing caution ahead of earnings on April 30th, and they better deliver strong earnings because these institutions have made this big bets, and they don't buy just to hold for a quarter or two. If AMD delivers the goods, they're probably back buying more. If they fail, then they're probably going to sell and move on to NVIDIA or Broadcom. So that's my story on AMD, and I'm sticking to it. A couple software names that I like: Datadog, just consolidating in a base here. 9-week base. I know if you bought it, last April, good for you. But we have to deal with what's going on here on April 12th. And on April 12th, this thing looks like it's consolidating in a base. It traded above its moving averages. Our relative strength line went through the moving average there. So I like Datadog here. I'm not ready to buy it yet because the market's a little wonky, but I'm definitely watching this one. And yeah, I wish I would have bought it, here, but I didn't. So we're dealing with Datadog right now. I think it looks good. ESTC is another one that sold off following its earnings report. Still at $97, right below 100. It's just kind of hovering there and testing and retesting these lows here. So if it continues to do that, I'm interested. If it forms a base, I'm going to forget about all these indicators, all these lines. And if this thing starts to form a base, I'm definitely interested. And this is one on my watch list for sure. I wanted to point out that the action in AAON, because this is what I'm seeing is like stocks form a base, and then they break out and you think, oh my gosh, we're going to the moon, it's going to make a big run, and it just pulls right back to its pivot area. Supported at the 21, doing nothing wrong. And a lot of stocks will do that. They'll make a move higher, then pull back to their pivot point. So not the end of the world. Another stock that I'm watching, but I really thought, in a different type of market, if we were in, November, December, January, February, this thing would probably be running higher, but now the market's choppy and, the profits were just sold off. So that's why I said, you buy and your stock goes up, you better take it because it won't be there the next day. That's AAON. And the last one I want to look at, well, there's a couple of them here. This is A-Lab, hasn't traded that long. I think 30-minute chart will give you its entire history. And I just wanted to point out that it made this low here, on one of the first trading days. That might have been the first day, the 21st. And it made a load there of 63.45, pulled back to 66 on this date here, the first, 66.76, and retested a couple times there, 66, there's 60, 65.89. See, just these little retests. And to me, if this thing can hold, these lows here that keeps, trying to test and retest, if it holds there, I'm interested, but it doesn't have enough trading history for me. But it's one that I have on my watch list, so I wanted to just show that. And the last one is CPNG. Everybody's hot and heavy on this one because Druckenmiller bought it. This one broke out and on Friday and moved higher. I think they said they were going to raise prices or something. I don't know. What is it? The Amazon of Korea, something like that. That always scares me when it's the Amazon of anything. But you can see its earnings line is heading north, and you can see the breakout. Easy to see that. Well, I'm just watching this to see how the breakout performs. It was up 16.5% last week. And that's my weekly review. Thank you for watching. Oh, wait a minute. I do have one more thing. KLG, Tom Petty stock. This is a Kellogg spinoff. I don't know what cereals. I got to dig more into this. Cereal stock. But, definitely like the action here, the IPO base and the breakout there on the weekly. And you can see it on the daily here. Sold off as a lot of IPOs do, and then now just ripping higher. So I just wanted to put that on your radar. Kind of a defensive name, ready to eat cereals. I'll look more into this before I put it on any list there. But anyway, just wanted to point that out. That's my weekly review. Thank you for watching at mcstockcharts.com. We never give up. Have a great weekend.